All right. You guys should be sharing my screen. Let's do a sound check. Everybody see and hear. Let me pull up a chat box or I can't communicate. Just a real quick sound and screen check. Good, good. All right, GB. If I had a prize for the first one to respond, you'd get it. If I had a prize for the second one to respond, Rob, you'd get it. But I don't, so you guys get nothing. So you guys might remember or know that I was at this Toronto Money Show, this convention. And I want to give you guys a sense of what I learned and what I got. I did video the 45-minute talk. You guys have heard me say a lot of it. I'm going to have it edited and pull up the sound so the sound's a little bit better. And then, you know, if you guys want to watch it, go watch it. I don't think 45 minutes. That's why I kind of want to have it pulled down into maybe a 7 or 8 minute video. And but the point is, what did I learn going to a convention? Here's what I learned. And I say this to a group of more intimate people because I feel like I know just about everybody pretty closely. And that is, it was kind of a different group. When I say different, to me, they seemed like a much, 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 much better chance at being the prey and are the prey in this business of trading and investing. Now, this particular show was more investors, 70% traders, 30% by the survey that they take. So the Trader Expo, which is also run by the Money Show, is more 70% traders, 30% investors, kind of flipped. This was 70 investors, 30% traders. And I kind of did a survey or a poll out loud, informal, and that's kind of how it came up. Most were longer term or time frame type traders, and then some were day traders, swing traders, and then some were just, you know, looking to find some different tools to invest. So a real general approach as to what they were doing. And so I knew I had to keep it general. I wasn't going to get into dials, and I wasn't going to get into uh, delta and footprints, obviously, lose them quickly. But 70% investors, 30%, if you look at my illustrations, were shorter time frame traders, more like us. But what I seen was a common denominator of people that were more or less the prey than they were ever going to be the hunter unless they really took tools that I teach and others teach to put them in that position. They were not market timers. They were just market I don't want to use a disparaging word, but they weren't market timers. They were more apt to do something. They were more apt to do something based on how good someone told them an ETF or a strategy was to buy, right? Or a new mutual fund. Because I could hear, I stepped in at some other presentation, and that's what he was kind of pitching. And that's fine. Maybe it's great. But they're more apt to do that than they were to manage or trade their investments. So as I was preparing, I said, that's kind of what I do anyways. Day trading is one thing, but on longer time frame scales, you got to also learn to take this kind of information and trade your investments, right? Think about that. I do that. I think some do that, and that's where you could make this shorter time frame study applicable. I know I do, right? And as far as your investments go, do you want to just buy, hold, and in 30 years wake up and it's worth a lot more? Or do you want to make good objective reasons to get in and out so it's really worth a lot more? But you got to understand some really good general basic principles. The thing I talked about was market comparisons or divergences. I don't want to get into that. You guys know that. And as Peter said, in all caps, they don't know SHIT. I'm glad he said it. I said it. I would say it, but I don't want to again be disparaging. It's not to everyone that I seen or met there. I just felt like the overwhelming people walking in the hallways. Now, people came and seen me, to me, are a little bit more inquisitive because they could have went and seen someone else next door that maybe had a bigger name, and they came and seen me, and we had this room filled out. But they don't know what they don't know either. And I think that what's good is there's always going to be people like that. It doesn't mean that this convention was bad to go at. I think it's maybe if you take the first step to go into something, you should do it. I didn't really try to push and sell the Edge program. I really didn't. Someone asked me about it, so then I put it out. I wasn't even planning on telling people, hey, if you want to know more about me, come to my site and buy this, buy that. I didn't push, I didn't sell, but a guy asked me about it. So then I went out and then I said, well, you know what? If you guys are interested, then yeah, I do have this. Nobody bought it, and I didn't think they would. Too big of a decision for them. God forbid that they make a decision um, with their money to understand something. They just want to make money before they understand anything. They want to get lucky. In other words, I think that's just me. But I'm bringing this up because it should be positive to be able to see the prey. Right? There's a lot of prey out there. There's a lot of deers. I don't want to get if you're a vegan. I'm not going to get in arguing about killing deer with vegans, but killing deer is what you do. Killing animals is what you do when you got to eat. There's a lot of them out there. And I think that that's one plus to this business. It's more accessible to people more and more and more and more, and yet it hasn't hit its stride. It's not as popular as Texas Hold'em was for a good period of time in 2005. And then there was websites all over and the government shut it down. The government's not going to shut down trading, right? Because it's already regulated, it's been around. But yet it hasn't hit its stride as being really popular. You get a lot of these prey to the business. So that's one plus. The other plus is I think that the micros are giving people a real good sense of how to practice, how to trade, how to figure things out without having to lose a lot of money first. Because if you lose a lot of money first, you never turn that corner because you never got to a point where you could kind of really felt objective to figure out what you did wrong to lose that money. Why? Because you lost a lot of money. Who wants to go back and review? So when you turn a corner, you're able to do it because you're able to, climb through that street by reviewing what you did wrong. And I think the micros the micros are a game changer in giving people that sense of how to practice, something to practice with, and still having skin in the game. With that, I think that the CME, and this is just speculative on my part, are going to create a more transparent level playing field. When I say transparent, I meant level, should say more level playing field. And I'm talking faster because I want to get through some things. But they want to get through, or they want to get. See, listen, any exchange has got to make money. Any company, and they've been able to make money with a lot of HFTs, I think, and they've made money with a lot of algos and all these things that go in with commissions. They charge them less commission, but they know they're going to get volume. They know they're going to get chargeable fees. And the exchange, the CME group, they make money on exchange fees and clearing fees. They own both. They obviously own the exchange, but they also own the clearinghouse. They double dip. These are your two biggest fees in any fee structure. Any commission, commission is what your broker and IB charges. NFA is a couple pennies aside. That's the self-regulating futures industry, and then the CME exchange fees and clearing fees are the two bigger ones. So my point is, they're going to go where the money is, and I think a lot of these bigger, if there's any kind of, and I don't want to over speculate, if there's any kind of unethical ways that they give information to other companies, to other HFTs to front run our orders, I think that they want to create an environment. I think they're going to see the retail, the environment with the micro and the attraction that it's been brought. I think they want to give people a much better chance to see what everybody could see and have speed bumps. So HFTs don't have an advantage over a guy clicking in Atlanta or a guy even clicking in the middle of Iowa. Obviously a decent speed, but not 5,000 times faster than the blink of an eye. I like to see these go away. They're going to be easier. So I'm bullish on this business becoming easier to turn the corner and be more consistent. All right. There you go, Alan. Well said. And Alan, I notice you come here every week. Your first one in. He says, people are lazy, always looking to lose weight with a pill. Wealth needs work. I like those three words. Wealth needs work. Wealth needs work. I'm gonna use that line if you don't mind. Wealth needs work. Not only to get it, but to grow it and keep it. Well said. So that's the Toronto Money Show. I'll send you guys within the week or two kind of a edited version. So maybe I'll have a full thing of it and then the edited version of it that you guys could listen to. Again, you've heard the stories that I tell, but maybe you're interested in seeing me and maybe you want to make a life-size poster of me and hang it in your office. That aside, that's what I did over the weekend. It was successful. I knew I had friends up there and got to hang with them. Filled the room. Maybe if there's 100 people that could be there, every seat was taken. John came, who's from Toronto. It was a last minute thing. And so John was there. Got to meet him. That was awesome. Now, the next thing I want to talk about is today. Like, I didn't think that Trump's comments were that alarming. And yet here we are, 25 points lower than when he came out and said them. He came out and said them at 05 even. I effed up by not catching it. I really did. And I talked about that at the end of the trading room. But I didn't think that it was bearish until we stayed below 05. That was the ground zero on the upside. So if I blow this chart up real quick, I got to say this. This is the top of this move. You know that now, and it's easy to see that. But at the time, ground zero was probably going to hold it. I told people, if you're long from below, don't be a hog through 4-5, where we started the Trump comment. So he never was able to get above where he was. So I do think that if we're trying to update everyone, the whole Ukraine thing is a right, and then the left might be Trump being kind of aggressive on China, and I think that's where some of this weakness. This could be unwound very quickly. I don't think it's that big of a surprise that he talks tough on China. Everything he has said before. I think the market just would have preferred him being a little softer on it. And then I don't know about this Ukraine thing. I think he likes the uncertainty around it. If he didn't do anything and he's got the transcripts of the call, number one, if he does have the transcripts and he didn't do anything and he wants people to know he didn't do anything, he'd release them. But if he didn't do anything and there's nothing damning on those transcripts, he might still want people to chase him down because it brings attention to what do you mean Ukraine? Why would he be asking Ukraine to do something? What did he want him to do? And it gets people privy and apprised to what Joe Biden might have done and just gets people talking about it. So the person that doesn't like to see this is Joe Biden. Trust me. He doesn't want to see whether he did or didn't do anything wrong. There's video of him talking about holding back $1 billion if Ukraine didn't fire a prosecutor. And the prosecutor allegedly was going after a company his son had interest or was on the board. So 2 + 2 = 4. Don't know if it has any teeth, but either way, he doesn't want attention being drawn on this. So don't kid yourself. I don't think he likes it. But, the only way this is tough on the markets and bearish on the markets and impeachment has any kind of legs is if he said clearly on the video or on the phone, hey, investigate this guy and I'll give you, a few $1 billion, something like that. You know what I mean? But who knows? I don't see that happening. Either way, I don't think the markets, that's not a driver yet. That's just on the sidewalk, maybe waiting to get picked up. The other thing is these dials. All right. I've showed them on and off the last couple of weeks. I'd like some input. Give me an email, Anthony@edgetradinggroup.com. You guys know. So these dials are what? These dials are just uptick, downtick of each circle is a market. Let's look in the upper left. This is a rolling 5 minutes, not the last 5 minutes, but not like a 5-minute bar chart where every 5 minutes is that specific 5 minutes in time. It's a rolling 5 minutes. So over the last 5 minutes, the ES is, 3/4 near its high. So these are all 5 minutes across the top, all adjustable. In the middle are all 30 minutes. The rolling 30 minutes, the ES is about 3/4 near its highs. Then take a look at this. Then you look at the actual chart. These are the last 30 minutes, right? And it's about 3/4, right? This would be 50%. It's about 3/4 top of its range. Top of the range, bottom of the range, half the range. They're in the top 75%. Then you look at this dial over here, and you could see they were pointing at 2 o'clock or whatever. So this is a good way to, for me, get a sense of where they are in the last 30 minutes and who's strong, who's weak. This is oil, by the way, 30 minutes. These 4 are the 4 equities. We don't have the DAX in there yet because I'm working on it. hadn't got Eurex data, but you'd be able to put that in there. You need Eurex data to have any of these things work. But they're cool for that. They're cool to kind of preserve some real estate on your screen. I don't think they're replacing charts, bar charts, candlesticks, footprints. I think the edge zones make it easier to read a footprint, both the edge zone audio and edge zone video. So you have to look at all the numbers necessarily. And that kind of eliminates some of that. And then these are going to make it easier to see upticks, downticks, and big moves and compare contrast than a chart. If you look at the bottom row here, you got 4 needles. Each needle represents a different market. So it's like taking these top 4 here and putting them on one dial. Each needle is color to a different index. And this is 5 minutes, so you're going to see them swing. Sometimes you see a needle that is off to the side here. It's yellow. You don't see it. And it's an outlier, potentially. And then you could put this 5 minute on a 30-minute and compare them and things like that. But we're trying to break it and do some testing so it doesn't break after we roll it out. I think this is a really cool way to truly follow markets and in an instant say who's strong, who's weak compared to each other, who's maybe leading, is there a leader, is there a sense of, let's go to Vegas, one guy is an outlier, who's going to follow who's going to come back together. Here are the 2 ancillaries that could work opposite. I'm sorry, these 2 right here. Yen, where my cursor is, bonds. See, the bonds are strong. They just weakened up stocks maybe. This one's got the bonds and the ES. The ES is the aqua blue and the gray is the bond price. And so what's interesting here is the bonds are pinned on their highs, making 30-minute highs, and you're getting some weakness in stocks. Coincidence? Probably not, but I wasn't watching that whole progression. Now, I wanted to ask you guys, the whole reason why I'm showing it to you is it only works on Sierra, but type in some suggestions you'd like to see added to this, or email it to me after you've given it some thought after this session is over. So email me suggestions to the dials, Anthony at Edge Trading Group, or type them in here, or do both. These, I know these are not like super brand new. I know Peter at Jigsaw has gauges of the pace. These I just tried to simplify even more and then put double needles on stuff. And then there are some other ideas I've had to add to it. I want to see if they kind of overlap with what other people think. Now, one thing I will add is that we can go on forever putting stuff on this. And so it has to be phased in. So whatever we roll out with doesn't mean that's the end all. But yeah, I have considered volume. Bill makes a good suggestion, adding volume on these. I think that would be cool. I've also thought about putting edge zones, like, for instance, let's see, maybe for instance, a red, this would work, a red edge zone that maybe came in there and would be a hashtag, or would be a dash through the circle. And so when the needle came up, maybe it didn't get through it. Remember, if the needle goes clockwise, it's rallying, counterclockwise, it's breaking. That should be intuitive. But maybe there's an edge zone that would pop up there, and then maybe it's a green edge zone that would come in here or below the market here, right? That is possible. And that's a way to not only look and put volume on it, Bill, but balance volume. So Bill mentions Peters and Jigsaws are volume and delta only. Delta was the other thing, is they have another needle that was telling you where delta was at the same time price. So it's like if you had, let's say you had delta was this needle here. If you're looking at this chart, look at this one right here. If you had delta would be a needle. Delta goes up. Does price go with it? So that's also in the suggestion box. I don't want to be a software guy. That's the one thing. So whatever I have, I don't want to be in too much into software. So you guys got anybody else got suggestions? If you do, email. I know you do. Email them to me. Keep it simple. And my goal is to pretty much have them be able to be sized, and then put them along the top, maybe of my screen like that. Like drop these charts down to here. I want a true I've always wanted a true instrument panel like a pilot. When I was flying to and from Toronto, I always try to peek in at the cockpit. Sometimes they stand in front, ready to call the FBI, but I like looking in the cockpit at what they have. In fact, one day I wished Captain George or Carl or Dave would show me a real one. Something's going on. Something going on here with the EU. Something's going on bearish wise. Be careful selling it. Bless it. Just missed buying this bottom. Careful selling it because I think it was overdone. It's something out of the EU. You guys got it? Or impeachment? They overdid it. God bless it. Ever since I got back, even started Friday. I'm like a little late on everything. I made a joke that I've been late so much I'm thinking of getting a pregnancy test was the joke I made. I heard something on the EU acknowledges it has received fourth set UK proposals, but that didn't move us. And then someone mentioned about impeachment. Bill, where'd you get that from? All right, expects a trade deal soon with India. Alan, you should come down to Toronto. Thunder. Take a look at your Skype, Alan. Tell me if that's it. The story is about Elijah Cummings saying that he was meeting with Pelosi about an impeachment meeting. That's what happened. And I didn't catch it down. So I tried to buy 73, 74 when I said be careful selling it because it was going to be too late. And sure enough, they jump it. They're going to, this is good. The impeachment, when I say this is good, impeachment now is something to add to your, even if you guys are watching this in the future, as we record these coaching sessions, this is relevant. This is a new, I don't want to say driver, but it got in the car. Will there be an impeachment? Now, it doesn't matter. Remember this part. It doesn't matter whether the impeachment could be successful. It's the uncertainty of it. It's the uncertainty. Does it affect the election? And if it affects the election, that's going to have market moving consequences. Is it going to be like the Russian probe? Because that's kind of what they want. They want that cloud. Don't kid yourself. They want a big black cloud over Trump most of 2020. for the November of next year's election. So you got to so impeachment now. Dale says her report China was offended by the remarks. I wonder if they should have hold on one second, guys. All right. Look at this. Something else come out. Hey, Longs are stuck at maybe 73. Turned this coaching session into a trading room session. I thought they were long stuck at 3 even. They get back above it. Back through it, they're stuck. 3 3/4. He's trying to buy it and they're not going up. Look out. That was a look out below moment. 3 3/4, 3 half. No luck, no luck, no luck. Stepped on it. 2 points. Yeah, I don't know if you heard the audio, but 3 3/4 bid, 3 half bid, 3 half or 3 3/4, 3 3 half, 3 3/4, 3 half, 3 3/4, 3 half. Wham! They crack it down to 71.50. Back up to the scene of the crime. Now it's almost like three things, guys. Watch my screen. Let's not go green. Green's ugly. Let's go yellow. Impeachment, Ukraine, China rhetoric becoming a perfect storm for some downside. We opened up 9 points higher. They have cracked it to be 24 lower. I'll do the math. It's about a 33-point swing. 3 hours later. All right, so I turned the edge coaching session into a bit of a trading room session as we got some news across the wire. Impeachment is getting hotter, stemming from the Ukraine phone call. Like I said to you, if he has nothing to hide, he'll show the transcripts. If he wants to call off the hounds, if he wants to keep it stirring and he has nothing to hide, he'll hold the transcripts back. If he has something to hide, he'll hold the transcripts back. Take a look at the dials. They were 3/4 near their highs when we started showing this, right? Now they're all the last 30 minutes near their lows. One thing that you got to start watching is the fear factor. These are the fear markets. Take a look at this jump in the yen. If you can't catch the, you got to know where the yen is. If you can't catch the S&Ps and they have a quick move back up, maybe you could sell the yen. I mean, take a look at this. When remember I said I missed the 74s, I didn't come right over and try to sell the yen, but the yen was doing this. It's not a coincidence. The yen came off there, came off hard. Then the S&Ps got hit. Boom, they rallied. Then they came off hard again. Correlations work better and are even more important when volatility picks up. All right, one other quick thing I want to talk about in this meeting is, so we covered a little bit of the prey that's out there, coming more and more coming to this business. I'm telling you, there's still a big uptick in people who think they could do this and haven't even realized futures are around. The micros are making that possible. Second thing, the dials. Some input on the dials. Email me, Anthony Edge Trading Group, whether you're listening to this now or in a future recording. The dials right now just show up tick, down tick on different time frames, but I am open to suggestions. There is some delta or volume and imbalance stuff I'd like to put on it. China considering opening door to Brazilian soy meal shipments. I don't think that's very new as far as what they're looking to do, but net, that means they wouldn't buy as much U.S. product. Again, I think that's in the market. So gold has also been a nice inverted correlation. Let's bring gold in real quick. You can look at gold here on a 10 tick rotation, up, and away. It's gone, and it really took off. I think this is a 10 is too high. Let's go to a 4. Never seen that. Oh, what that meant. It changed it for me. And you could see the jump that we had when the stocks went down. Gold, flight to quality. People are nervous, hoarding their cash, buying gold. I got news for people that buy gold and silver because they're worried about the end is near. Keep your cash, bundle it up. That'll always be more valuable than gold. Forget about what they say. When you're on the streets, people aren't going to barter for gold. They're going to barter for bullets, water, food, cash. Water, bullets, water, food, cash. And here's the other thing. Don't bet on the end of the world. It only comes once, and you won't be around to collect. I do think, though, that there's always that chance at Armageddon, though. So one last thing. I'm looking at the markets, looking at the questions, trying to do all this. But one last thing I want you guys to think about, and we'll do another session on this, is number one, I'm going to call it this 1-2-1-2, right? Just to get your head right. Anytime you're looking at a tool, and we're trying to always look for buying or selling. So when you find the first thing, buying, okay, that's one. Second thing is you always got to know without having to look too hard is where are you at on the map? We have sessions and courses done on where you're at on the map, location. Did we just break from here to here? Did we just rally from here to here? Whatever, right? Are we going sideways in a box? Where do you see the buying or selling? But in this case, buying. Then the second one, buying. You see buying. And number two is what? What, meaning what does price do when you see the buying? Go over those courses. So, I mean, nothing is ever in a vacuum. When you're looking for buying, number one, where did it come in? Number two, what does it do to price? Right now, aggressive selling is pushing this thing lower. They're having their way with it. All four equities are pressing, reprice. Ooh. David, are you here? I turned this into a little bit of a trading room session because we've been so active. I want to keep guys. I can't get on the team. Anybody been able to catch this? Take a look. Don't get caught in the hole, please. 68's a magnet. We might go to and through 68 up to 70. There's a reprice. What I mean by reprice is there's been enough clouds that have come together in one day to make us go up 9 to down 32. And it's going to be on the nightly news. And it's going to be Trump, Trump, Trump. It's going to be Trump in Ukraine, Trump in China, Trump in impeachment. TI, TC, and TU. And the TU led to the TI. Don't kid yourself. Trump likes to. He likes I used to think he hated negative attention. Now I think he like revels in it. Bad news better than no news for him. For him. Nice, David. So give some thought to the 1-2-1-2. You see buying. Where on the map are we when you see the buying? When you see buying, what does it do to price? It brings in the stuff about after you buy it, you're a seller, or the punch in the face, where you're at on the map. All right, there we go. Back up to 67, not quite to 68. The other thing is the repos. Tom brought that up. Kudos to Tom. He brought that up before anybody was talking about it at this time last week, where the New York Fed had to do some repos because of a spike in overnight interest. Then it's in the way to more of the business channel stuff. They started talking about it. Everybody had muscle memory to 27 or 2007, 2008, and the whole financial crisis, but didn't really stick, and the markets ignored it. But I don't think that that's a boogeyman that is not real. Hey, 68s. They just had some inventory at 68. Let's see if they can come out. 8 even, I think he said. Did you hear that? All right, I'm not sharing computer sound, but you hear 68 even. Some aggressive buying came in quickly. Couldn't get it to go up. We've dropped about 5 or 6 ticks. There's always that moment of a big slide, right? So you get this slide here. Look at my cursor. You got this slide here. You got this slide here. And everybody's trying, including me, trying to position yourself for the next slide lower and this reprice. Don't get yourself buying it, buying it, holding it, adding, because these are days you get your face ripped off because you don't know how to trade, manage your risk. All it takes is one stupid idea to put something on in a volatile environment. One stupid trade, and if you can't get out, it paralyzes you for a big loser, and even worse if you are an adder. Every time you add to a position, it all started from one stupid idea of a trade and an idea you had of getting long or short. It didn't go your way, and you added. Kept going against you, added. Kept going, and then it became hope, no skill. Skill turns to hope pretty quickly. So the more volatile markets are is when the adding doesn't work and where you lose everything that you made and then some from when it did work. And even when the adding does work, it's a lot of emotional capital you live through just to break even or make a little bit of money. Right now, those 68s held, and there was some buying up there, couldn't go up. Downside, right side, there's looking for some water on the slide here. It's turned into be a good session. I hope people profited from it. 70 and 74 going to have to get tested. They couldn't slide it. They came off 68. This long down up bar proven to be a little transition. I don't think they hold 68, 70 and 74. Too much damn inventory not to go there. Just my opinion. Keep an eye on headlines. Headline risk. So Bill says Pelosi's comment specifically on NBC to NBC 22 minutes after 11, he felt, and I agree with him, sent the markets lower. And they've been able to hold 70 and 74. There's some inventory on that upside. What did I want to leave you guys with? If you have NinjaTrader Verbal Journal, the license aren't checking in because the website's down. It's a GoDaddy maintenance issue. GoDaddy sucks, and I'm leaving them. Not only is it a crappy hosting company, but they're ignorant. But it should be up soon. It's only on Ninja. People who have verbal journal on Sierra. Next time you check into Sierra, check into your studies. The new download should be there. If it's not, let me know. That's Verbal Journal Sierra. Verbal Journal Ninja, that's worked perfectly, but the site's down. If the site's down, it's not communicating with your license. I'll let you know when it is back up. That's Ninja. Sierra should work, but we changed the download. A couple fixes on it. Takes a couple seconds for the dot to come in, so don't get nervous. And go away. Thanks, David. They don't go exactly to 70. Now they're coming back off. Damn, there's something that's important with this whole thing. I don't like the way this is shaping up. It's like it's a slippery slope to walk up, even to 70, 74. I thought for sure they'd be able to scramble up there. Now this little slide, this market, these investors, they don't like something. They don't like something. We go from up 9 to down right now, 30 handles in the ES. That's a 40-point drop in the last 3 hours. You got a triple threat: impeachment, Trump, China. All that could unwind in a hurry. But right now, those are the drivers. All right, guys. Oh, the 1-2-1-2. Keep your thoughts on that. We're right on the map. What does it do to price? Do not add to losers. Losers add to losers. And it's hard to add to winners. It takes a lot of discipline. Don't if you got to tag how much emotion you put into each trade, because roller coasters are fun unless you're on them too long. And then they're not fun anymore, are they? We're going lower. All right, guys. Good luck. I'll post this shortly. I turned this edge meeting a little bit into the trading room because all this price action we have could be a good lookout below day. Make sure you guys are not married to trades. Marry people, not trades. Remember, the market's got a much better divorce attorney than you do. GB, hold on a second. Eric, are you there? I'm going to stop the recording, guys.